Hey everybody, welcome back to another episode of Not Financial Advice. I'm Sean. Today is Tuesday, April 16th, 2024. Today we're going to be talking about Dollar General stock. And I have two questions for you. Number one, do you hate self-checkout? Number two, do you like the idea of making money in the stock market? If you have heard of Dollar General or you've shopped at one, stay tuned for today's episode because by the end of it, we're going to get an idea of the fair value of Dollar General stock. We're going to see why it's gone down so much and why I think over the next 3 to 5 years it's going to significantly outperform and make me a lot of money. I want to bring you along for the ride. So stay tuned. We're going to get into it right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
So we're in just the last few minutes of the markets trading today, this Tuesday. My portfolio is down 0.61%. I am drastically underperforming the market, which is essentially flat today. It's been a rough month with different inflation numbers and a crisis in the Middle East. So I'm essentially flat over the last month. I've given back something close to $5,000 in gains, $4,200 in gains. You know, if you want to outperform the market, you have to have more risk in the market. And so when things are up, I'm up. And when things are down, I can be down even more. So let's do a quick update on the portfolio, sitting at $76,000, about $200 right now. These are some of the names that are doing good for me. Here, 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 and here. And then here's some of the names that are really hurting. We're going to see where they're at. Some of these names down over 2%, here, 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 and there. That one hurts. All right, so let's get into it. We're going to talk about Dollar General stock today. I'll ask you to like the video, subscribe to the channel. And yeah, as I mentioned to you, we saw really great price performance on the stock in the first 2 years of the pandemic. And as things have started to change, the stock price has gotten lower. And we can see it's now down 44.25%. So rule of thumb, when you have a large cap company, a high quality large cap company that's down nearly 50%, that really gets my attention. It's something I'm interested in investing in as often as not. All right. And so let's just set the stage for this a little bit. Dollar General, what is Dollar General? Dollar General is a lifeblood of small towns of 50,000 people or less all throughout the United States. So they have about 17,000 stores. They out Walmart for rural Americans. They're also in inner city areas where Walmart isn't interested in doing business. All right. And so in a sense, they're the lifeblood of these small towns. You know, small towns used to have 2 bars, a post office, and a cemetery. That's still the case now, but you add in the Dollar General. And when you drive through, rural areas, as you go from town to town to town, it's a Dollar General all the way around. So Dollar General out Walmart's Walmart, and to a crazy extent, they out Amazon. The last places that'll get same day shipping from Amazon, Dollar General is there for those consumers. And so, yeah, like I said, over 17,000 stores in the United States as well as in Mexico. And it's looking like they're actually going in on 20,000 stores. So let's take a look under the hood. We're going to be able to use Qualtrum to get a visual understanding of its cash flow, balance sheet, and income statement through a graph format over here. And I don't have any affiliation with Qualtrum. I'll leave a link for it in the description below, rather. But let's take a look under the hood and see if we can figure out what this $145 stock is worth together. I'll ask you to like the video, subscribe to the channel. Let's just jump right into it. So we have a forward PE of 20.6. Seems pretty reasonable. We have a free cash flow yield of 2%. And then we can look at the dividends here. Payout ratio of only 31%, but it's at 1.6 payout ratio. So around or a little bit more than the US stock market. So a dividend growth name, yes, absolutely. So let's get into our thumbs up or thumbs down ratings here. So looking at revenue on Dollar General over the last 10 years, 8.25% top line revenue growth. Strong thumbs up for such a big, mature company. Great revenue growth for this type of company. And I will add, We're a large cap company here, about $32 billion market cap. So you have a large, mature company growing at 8.25% a year. That's fantastic. Let's take a look at free cash flow. So let's take a look at it on a quarterly basis. Let's look over the last 10 years. So what we can see here, let's see what quarter this is. Okay. So about 10 years ago, 159 million in free cash flow. Comparable quarter 10 years later, 478. So their free cash flow, obviously this with inflation and demand for toilet paper and whatnot and the pandemic, this is going to make it kind of hard here. But yeah, they have slow but steady free cash flow growth. They've ran into some troubles. So here's what's going on with the company. So they just recently brought back their founding or their strongest CEO, uh, Todd Vejos, I think is how you say his name. So that helped the stock go higher. They also tried to pivot. They tried to bring in more fresh groceries, which I think is a good idea, but they also tried to bring in more hard goods. The problem is that the average consumer here makes less than $40,000 a year. So while inflation was going up, they were trying to bring in hard goods, which the consumer pulled back on. And so they had a really hard time in 2022 and 2023. But we're seeing a turnaround on their free cash flow here. So just in totality, I'm going to give this a thumbs up. Could be better, could be a lot worse. So free cash flow is looking good here. Making sure you have all the context that you need to consider this investment. Let's take a look at earnings per share. This is something that can definitely move a stock on Wall Street. Up about 9% over the last 10 years. Respectable. It'll be a thumbs up. Looking at cash and debt. I'm not exactly sure how accurate this is, so I'm gonna sort of breeze past this. But I don't see them going out of business for what it's worth. Probably a credit rating as good as the US government. This is awesome. So dividends, up and to the right, doesn't appear as if they've ever cut. Dividends are growing at over 13% a year over the last 5 years. Smoking inflation, big thumbs up on dividend safety and growth for Dollar General stock. And so now let's take a look at the shares outstanding. Let's see if they're diluting shareholders. They're not. They're a dramatic repurchaser of shares, down almost 4% a year. That is so awesome. So a thumbs up for Dollar General here. Let's take a look at the other 3 or 4 metrics here that matter. So returns on capital employed. It's been higher in the past, but it's living somewhere around 15%, between 10 to 15%. So this is decent. I'll give it a subtle thumbs up there. And then taking a look at profit margin, this is actually a big story. So bottom line profit margin for Walmart, something like 2.3% or something. And we have a much higher margin here with Dollar General. So it's wanting to settle in somewhere around this, a solid 4% range, but they have the ability for it to be higher. So really strong thumbs up on bottom line profit margin for Dollar General. I'll ask you to like the video, subscribe to the channel as we are getting to the end of this, being able to figure out if we're interested in this stock. So historically, the stock trades probably around a 22 PE, and it's a little bit lower. So it'll be a thumbs up on relative valuation. Now, what we have here on this stock, we have understanding of why it went up. We have understanding why it went down. We know what its moat is. We see it's a $145 stock. Let's figure out what the fair value is for Dollar General. Hang tight. I'm going to pull that up for you right now. All right, so here we are taking a look at the fair value estimate of Dollar General's $145 stock. So what I've done is twofold. I've done an estimate of its value based on free cash flow. I'm also going to go ahead and do an estimate of its fair value based on a dividend discount model. First, we're running through the free cash flow valuation. So over the last 5 years, its average free cash flow per year is about 1.4 million. Currently, they have about $340 million cash on hand. Total long-term debt slash net debt is something like 6.4 billion. They have around 220 million shares outstanding. Now, as far as the growth rate, this is projected forward growth of their free cash flow. So over the last 10 years, they've grown free cash flow an average of about 20% a year. To be very conservative, I've forecasted that forward at just half of that rate for the next 5 years. For a long term growth rate, we've used 3%, which is kind of inflation slash GDP. And as an estimate, right in the middle, we've taken this number and this number, added them, divided them, averaged them for an intermediate growth rate of about 6.5%. These are all just best guesses, but meant to be realistic and conservative. And so, if we need a 10% return each year, the value of the stock on $145 shares would be only $111. I don't think that shows the whole picture. So, we're also taking a look at the value of Dollar General based on the current and future dividends. Let's take a look at that number and then see what we get in aggregate. All right, and so what we have here is the last 4 quarters of dividend payout, which is $2.36 for Dollar General. Same required rate of return of 10.5%. And then looking at the dividend growth rate for Dollar General, we saw a 2 year rate and a 5 year rate. The average of those two rates, a projection of forward dividend growth at 8.25%. We have we have Dollar General shares trading for $145 a share. My estimate it's fair value based on dividends themselves is about $146. And so what that means when we add the two sums together, I'm showing a fair value on these shares around $128.70. So call it a $129 on a $145 stock. I think it's within that range of fair value. So I'm happy to own it at this level and continue to add more in this range. Thanks so much for stopping by. If there's any questions you have about Dollar General stock or anything else in particular, leave that down below. Make sure to like, subscribe, follow me for more interesting investing ideas here on Not Financial Advice. See you on the next one.